Hard part when you're talking about gold or even the stock market at this point is we're at all-time highs. You know, when you've been at a high and then you pull back and then you rally again, you can look at it and go, okay, you can look at the chart and go, well, there should be resistance here and there should be support there and that kind of thing because we have history. But
the Financial Survival Network. Now more than ever.
And welcome. You are watching and listening to the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're exactly in mid-May here. Interesting things are going on with the dollar, copper, oil, gold, and silver, not the least of which our good friend from tfmetalsreport.com, Craig Hemke, is with us now to go through these markets. Craig, great to see you. So what is going on with these markets here?
A lot. How's that? That's a short answer.
Okay. Can you be more vague?
You know, it's been a remarkable year so far, especially, you know, with my focus of the precious metals. Here the metals have broken out for a number of different reasons. Obviously, everybody wants to narrow it down to one, and I think that's impossible. There's probably 5 or 6, but they've broken out before the Fed started to cut. You know, we have fought our way through. I mean, you just go back to the first of the year, Kerry. Market was anticipating 7 rate cuts. Yeah. Right?
Where
the
are
dollar
they?
Index was 101.
Where did they go?
Yeah. Well, that's just it. So if, you know, we could go back, and I'm sure we were probably, when I put out my annual forecast back in January, I bet that we probably spoke back then. And we talked about how, you know, that's got to come down. There's no way they're cutting rates 7 times. That's just not going to happen. And so we have fought our way through going from 7 rate cuts down to like 1, maybe 2. Dollar index going from 101 to 106, and now it's back under 105. Yield on the 10-year note's gone up by 50 basis points. And yet gold's up some 15% year to date. Now, maybe it's just gotten way out ahead of itself. I don't know. But I think there's a combination of factors going on here that have driven this. And now you throw on this notion that the economy is rolling over. We're getting into that stagflation you and I have been talking about for 4 years. We could get another surge higher in the precious metals relatively soon. And that, I think, would be fun for everyone.
2,500?
Yeah, if you look at the chart. See, this is what's always hard, Kerry, you know, because, you know, I like to look at the charts. I'm not like, you know, one of these Elliott Wave guys and all this other jazz. But I do think you combine that with fundamental stuff, and it kind of gives you a picture, you know, of which way the market is heading. Hard part when you're talking about gold or even the stock market at this point is we're at all-time highs. You know, when you've been at a high and then you pull back and then you rally again, you can look at it and go, okay, you can look at the chart and go, well, there should be resistance here and there should be support there and that kind of thing because we have history. But gold's at a level it's never been before.
Uncharted.
Yeah, you're off, you know, beyond which there be dragons, right? You're off the map. And so that makes it difficult. But I do think there's ways you can kind of project it forward. Just kind of natural sentiment of things. And so, yeah, you know, if there will probably be an inclination here from where we are here on the 15th of May, there'll be an inclination or an effort made to paint some double tops. So people should be on the lookout for that. You go back to the middle of April, 5 weeks ago or so, gold got up to about 24.20-ish. Silver got within a whisker of 30.
Hair's breadth, yeah.
Yeah. And then, you know, pulled back, you know, some natural resistance there, especially in silver. And now here we are getting back those levels. I would anticipate an effort made to paint the charts with a double top sometime in the next week or two, just as a line of defense for all of these banks that have all of these shorts. I mean, again, when you're at an all-time high, every short is underwater. Every short ever created is underwater. So that has to be managed. So I would anticipate that. But, you know, Powell, Kerry, when back at the March FOMC, interviews that he did after that, and then again at the May FOMC, said he is watching the labor market real closely. He knew that they They hiked too late and inflation got away from him. He doesn't want to cut too late and have the economy tank. And so he has said, and I'm paraphrasing, but anybody can look this up. He has said repeatedly that if he senses weakness in the labor market, they will cut. They'll put inflation on the back burner and they'll cut. Well, we're starting to see that. The latest jobs report was weak. Some of the internal stuff over the last couple of weeks has been weak. So if we get now into the summertime and all of a sudden the Fed does cut or start actively talking about cutting, any double top painting by the banks isn't going to hold. And that's what we'll look for next.
That'll be the signal.
Yeah.
Hey, so yeah, I don't see where they have any choice. They're going to have to cut. And we talked about that, but they want to put it off to the last possible moment. On the other hand, the Fed Chairman Powell absolutely despises the challenger to the throne and has come out, maybe not on the record, but through leaks, as supporting the current occupant of the White House. So I remember one time Alan Abelson wrote in Barron's. He was a long-standing editor of Barron's. He said, "The Fed is now doing what it does best, helping to get a president reelected."
Yeah.
When are they going to fall into that mode, right? Because they are a political institution, even though they pretend not to be. But everything is political nowadays.
No doubt. And that was, I mentioned that forecast for this year. I had to write about that because that's to be expected, right? I mean, even if you think Powell is at the top, tries so hard to be apolitical and he wears a purple necktie every time you see him in public, right?
Yeah, right.
Just like Mother Yellen always wears that purple pantsuit. They're trying to give this subliminal message that they're a combination of red and blue.
She's not my mother.
So there will be pressure as we go through the summer. It will start, and frankly, it's already started with Pocahontas and Bernie Sanders and AOC, all talking about, oh, the people need a break. Credit card rates are so high, and all this kind of stuff. The pressure will mount. We've seen now, this uptick back up in the unemployment rate. The jobs number, the headline number they always tout, whatever. But the unemployment rate is what Powell says he's going to be watching. It ticked down, it ticked back up. If it starts trending above 4.1, 4.2, it'll come. And then we'll see how the markets respond to that. They might initially go bonkers. You might get the S&P to surge another 8-10% or something. And that might be enough to surge gold up to 2,600 and silver through 30 to 35. Then about that time, that might be the time that when everybody's all excited that we start getting, we get a pullback again. But I sure think that, Powell has told you that he'll cut rates if there's any sign of weakness in the labor market. We're certainly starting to see that weakness.
We're seeing layoffs galore. I think it's been there all along, but the numbers are all cooked. You just can't believe any numbers. But
right.
Big news, copper on the Crimex broke $5. Hey, it's trading at close to that in the London Metals Exchange. What is your take on it? Because it's different than mine.
Well, I apologize if that little noise came through. Somebody trying to call me on Skype. So I don't know if that.
Don't you love it? I didn't hear it. We're good.
All right, good. Anyway, if I look distracted for a minute. Copper is a very interesting story. And we're going to relate this all eventually back to silver, right? Because silver's banging up against this $30 level, which has contained it now for almost 4 years. Okay. Gold broke out of its range back in March and immediately shot more than 10% higher, right? And it's still up here. Did that break silver out? No. Okay, well, maybe if gold goes higher, it will. Well, what else could drag silver kicking and screaming? A move in copper. Because copper and silver at this point are basically, silver's more like copper than it is gold at this moment in history.
Yeah.
It's a conductor of electricity and everything else. Still has monetary component that may return at some point. You got people invest in silver. They don't invest in copper, but you get the idea. Okay. I refer back. I mentioned this forecast I do every year. in January of 2023 in my forecast, I had a whole section on copper because as 2023 began, there were all sorts of analysts and investment banks, even Goldman Sachs, that were saying above ground copper stockpiles could be extinct by August, not August this year, August last year.
Wow.
And copper was going, right? And then it just,
Then it died.
they found some, I guess.
Where?
Okay.
What warehouse was it lurking in?
Exactly. Well, now hold on. Let's fast forward about an extra 8 months. Maybe they were all early. Maybe they were all early because now copper is going through the roof. We're seeing all kinds of signs. I found something on Twitter about some now the name escapes me, but some rates that smelters pay for copper concentrate being negative, meaning they're paying for it, trying to secure supply. All these different signs that copper is suddenly in a serious supply shortage. So maybe, some of these banks that were looking for above ground copper to really be in trouble and supply shortages by late last year, maybe that's now all coming to fruition. The price people should watch, though, is not the COMEX copper price. That's what gets quoted all the time. As we record this earlier today, that went to $5.13 a pound and then immediately fell back like to $4.85 a pound. I mean, that's a huge move. Went up 7% and then fell 5%. That's all speculative stuff. There's no copper that gets delivered in New York, just like there's no gold or silver.
It's paper market.
Right. If you want to watch the copper price, watch the LME price, the London Metals Exchange. That's more of your international benchmark. It's an actual functioning market. They actually deliver metal there. That's the one. Right now, it's about $10,200 a ton. You can do that math and go, okay, well, there's 2,000 pounds in a ton, so that's $5 a pound. Whatever. The COMEX price is going to continue to do this kind of stuff, right? In terms of copper, though, watch that tonnage price. It got up to $10,000. Kind of ran into psychological resistance, banged around. It's now really established a foothold above 10,000. A lot of the big investment banks have moved up their price target to now $12,000 a ton. Okay, well, if that's the case, then you could expect that COMEX copper price to go to $5.70, $5.80, $6, all-time highs. And now getting back finally to where I started this, Kerry. If you get gold, if gold goes higher because of what Powell's doing, all this kind of stuff, and goes to say 2,500, and if copper goes to $6 a pound, silver's not going to stay at 28, 29. Okay, it's just not. And so when it finally gets dragged kicking and screaming through that resistance level at 30, there's a really high likelihood it'll go to 34, 35 in relatively short order. That's going to have big impacts on the mining shares. And that's all something people should. So watch copper closely in the days ahead.
So your feeling is that when this thing breaks out, okay, and it will, that it's going to finally take the junior miners with it?
Temporarily, at least, yes. And I say that temporarily just because of the natural ebb and flow, right? You and I have discussed in the past the clear correlation between not gold and the gold miners or the ETFs, but silver, right? So yeah, you get silver to run to 35 or 36, a miner's going to go with it. My guess is we will have let's say that plays out over the course of the summer. Powell starts cutting rates, you get this surge, we get into June, July, and this happens again. There have been a lot of peaks in the precious metals, short term at least, that have occurred in the summer months. Okay. This could be another one that wouldn't surprise me based on how these things have gone over the decade plus that I've been watching it if it didn't happen again. You get this another big rush forward. Now this one finally silver's into the 30s. Everybody's excited. Here we go. And there's going to be people all over Twitter talking about silver going to 50, 70. And it will. But my plan will be when that happens to maybe be a little cautious at that point. Because you know how it is. When everybody in this sector gets all excited, that usually is some kind of top.
So
we'll see.
And they know how to time it exactly to
Yeah.
bring that price down, right?
Yeah. And then everybody gets depressed,
Mhm.
and thinks, oh,
Bipolar.
okay, well, and then again, all that's because of the fundamentals, because of the exploding debt, 30, whatever, it's 35 trillion now,
Mhm.
right? $2 trillion a year in extra debt. The interest on the national debt now $1 trillion a year, exceeding even defense spending, all that kind of, all of that stuff
Yeah.
in the end is what then makes it go even higher again. But there will probably be a point, if I'm right about another surge
Yeah.
forward in the next 60 days, when we'll probably get another pullback.
The tree
And
doesn't grow to the sky.
right, not in this current,
Not
not really
straight
good
up.
markets. Right.
And it's important to realize that in addition to all this, we've got a very weak banking sector. They say it's limited just to the community and smaller banks. I don't believe it. And I think that if you would just, what Powell said, that when employment starts to get affected, if you just say when mass bank failures are threatened, substitute that, then he's going to cut. He has to cut for
Right.
that reason alone, right?
Right.
So you got employment and you've got a shaky bank sector.
Yes.
And that's a bad combination, especially in an election year, right?
Right. And the only way you can pay off or manage the debt is with the cheaper dollars of tomorrow. You pay today's and yesterday's debt with the cheaper dollars of tomorrow. And
Mhm.
eventually, again, this is not next week, okay, or next month, but eventually they're going to go down the path of yield curve control.
Yeah.
Because they have to. Now, when
Sure.
gold took off, again, we started this by like, wow, it took off before the Fed even started cutting. On the 1st of March, it was Friday the 1st of March, gold shot $40 higher
I
and
remember.
closed at all-time and weekly high and daily high, like 2089, something like that. And then it broke out and went $100 higher the next week. But what happened on the 1st of March? Fed Goon Waller gave a speech. And he said, we want to do a couple of things going forward, at least what I want to do. He said, I want to roll us out of some of the longer term stuff into the shorter term stuff,
Yeah.
which will uninvert the yield curve. But then that will also give us room for the next round of QE to buy long-term stuff. And
Yeah.
everybody went, wait a second, the next round of QE.
What?
So what's
I didn't know it
coming?
had stopped. When did QE stop?
Well, no, exactly. And so what's going to eventually come? I mean, this is, again, it has to, otherwise the whole thing will do this. The
Yeah.
banking sector, everything. Is they're going to be printing money to fund all the ongoing deficits.
They
But
have
then
to.
they're going to do yield curve control to cap. The Fed will just say, we are buyers above a certain level. We will always be buyers above
Mhm.
3% or whatever they decide it's going to be, just like the Bank of Japan has been.
Yep.
And when you get to that point, now all of a sudden you'll have sharply negative real rates again because of inflation, everything else. And that's when,
Mhm. That's
off
it.
we go. Yeah.
Yep. Yep. Well, hey, monetization of the debt. That's all that QE is just monetizing the debt.
Right.
And but it's a fine line, because when you do it too fast, then you undermine confidence and you jack up inflation. Like, hey, why are the headlines in the papers yesterday? PPI experts surprised that PPI came out higher than expected, right? Who could be surprised by that? I'm only surprised it wasn't higher.
Yeah.
That's a cooked number, and that's a cooked number anyway, right?
Right. Like every other bit of government data in an election year, Kerry.
Yeah,
I
exactly.
mean, until this last report a week ago, every single headline jobs number had beaten expectations for 13 out of 14 months or whatever it was, right?
Yeah.
Yeah, I don't think you can believe any of that. And again, you can go back, it's not just election year. I
Oh,
mean,
yeah.
how many times they have to manage whatever the basket of goods are in CPI anyway to
The
create this
hedonic
illusion.
adjustments, all
Yeah.
that good stuff.
And again, it all pieces together in the management of the debt, because if you can convince the market that inflation is only 2%, then you will buy treasury bonds at 3% or 4% or whatever, because you're getting a positive real rate of return. But if they were to accurately report
Right.
what inflation really is, no one's going to buy a treasury at 3 or 4% except the Fed. And
Of course.
that's where we're headed.
And that's the name of the game. Hey, it's just the whole world is collapsing at once here, you know?
Yeah,
It's every
that's
place, everywhere. There's
that's the
nobody
scary part.
exempt.
Yeah,
So, when we go back to a gold standard, I always said it will be because it's the only option, right?
right, right. And historically, that's how the pendulum swings.
Okay.
You begin your currency begins backed by gold so that people have confidence to use it
Right.
in trade for goods and services, and you hold it because it's got some value that
That's a
anchors it.
cycle. Yeah.
Right. And then the politicians get a hold of it and they want their power. So then they wanted more currency for their wars and their social programs and everything else. And eventually you go
Hmm.
off the gold standard like Nixon did. And then you swing all the way over here to where the base thing's basically worthless. And then nobody wants it. And then all of a sudden you got to get some confidence again. And so it swings back over here and you back it
Yeah.
again. And that's the direction we're headed.
Hey, and wars and bubbles, they go together. The whole thing, the South Sea bubble, was about paying off England's war debt.
Yeah.
It was a scam to pay it off, and then it turned into a bubble. And then the Louisiana land purchase, all of that. So bubbles and wars and inflation all go together.
No
But
doubt.
yeah, I just find it really interesting that no matter what happens, the cycles just keep repeating themselves. We never get any smarter.
No,
You
we
know?
don't. No, we
We
don't.
just don't. All right, man. Well, hey, that is it for today. Make sure you go over to Craig's site, tfmetalsreport.com, and there it is in the screen. And there's a link in the show notes on financialsurvivalnetwork.com. How much are you getting these days? Because Starbucks, price of Starbucks has gone up. I started a site called Inflation Cafe, inflation.cafe, where we highlight all of these stories about inflation. And I got inspired because in Starbucks, my latte has doubled in the past 4 years. It's ridiculous. And they've increased the amount of foam. And then their loyalty program, it's loyalty from the customers. Whenever you see these loyalty programs, it's disloyalty from the company. They used to give you one free drink a month. They got rid of that. They used to give me a free drink on my birthday. They got rid of that. They cut back the points. I mean, hey, complete disloyalty. So I thought they were entitled to have a website named after them, and it's the inflation.cafe, where dollars go to die.
Like it. I like it. Well, I'm guilty of a little bit of that at my site. I started all this back in 2010.
Oh my God.
I quickly figured out this ad revenue thing and being beholden to Google.
Yeah,
Not a good idea.
not a good plan.
That ain't gonna fly. So in 2013, and to keep out the trolls, we started charging everybody $10 a month. It's currently 15, so it's up 50%, but over the last 11 years, that's not bad.
That's pretty good. Hey,
Yeah.
you're
Yeah.
not
So,
aren't even
but
close to what's happened at Starbucks.
right. And if I could look, I just tell people, everybody knows stuff's not free, right?
Yeah.
$15 about what you spend maybe for a magazine subscription, or to the website of your favorite sports team or whatever. But and I say this all the time, my site's different, man. We keep track of everything, but it's not just me, it's everybody on the site that's keeping track of everything too. It's a time like this, man, you need as much community, boots on the ground as you can. You can't count on your neighbor or the people because they're all running around their head in the sand trying to keep track of their own lives. But you can come to TF Metals Report and you can find a whole community of people looking out for each other. So for $15 a month, that's a pretty good deal.
Absolutely. All right. Links in the show notes. Make sure you sign up for our free newsletter. Craig's got one as well. financialsurvivalnetwork.com. Craig, we'll talk to you in a month or two. Or when I promise you this, if gold breaks 2,500, we'll get you on that day.
Okay. You
All
got
right.
it. Sounds like a deal.
Thanks, man. Always a pleasure.